Hi, Michael Fox, and this is the Prospector News Podcast, and we are on location at the New Orleans Investor Conference in Louisiana. And wandering the floors, I found good friend Scott Melbye, the president of the Uranium Producers Association of America, and we're going to have a little chat about the uranium markets here at a gold show. Welcome, Scott.
Michael, it's great to be with you again, and couldn't be more exciting times for uranium and the market developments.
Definitely, and it's good to have you here in person as opposed to over the computer screen out of our respective offices. So uranium over the summer and up until recently, and it's still going, it's kind of taken off like a scalded cat.
Yeah.
What's been the catalyst for this?
Yeah, it's we've seen uranium prices now reach the $73-74 a pound range. Really just a combination of a number of things. I mean, obviously demand for nuclear energy is growing with the energy transition and realization where nuclear fits. But the supply and demand sort of structural deficit that's been built up. We're producing 50 million pounds a year, less than the 200 million pounds a year globally that we consume. That was never a problem when you had abundant excess inventories, secondary supplies. That was making up the gap and moderating any price increase. But now that we really had those excess inventories drawn down, we now no longer have the buffer, and we've transitioned to a production-driven market. And as you know, bringing on new production isn't quick or easy, and I think we're finding ourselves in a true supply squeeze.
With the shuttered uranium mines in North America that due to low pricing, are we starting to reach the price point where some of them are going to come back up online? The cure for high prices is high prices type of scenario. And if so, how long does it take for one of those shuttered mines to get back into production?
Yeah, well, we definitely are getting back to a range, but I mean, I think what's different between uranium and, say, copper, gold, or silver is that we're not as efficient a market. We don't have as many mines in standby that can react to price signals in real time almost. So, we do see a bit of a gap, but hey, at $70 a pound, you are getting into the level that is incentivizing the better mines. So it's not surprising you see Cameco and Saskatchewan, once they get over some sort of production hurdles, getting to full production. My company, Uranium Energy Corp, we've said quite publicly that if we see uranium prices above $60 per pound for 3 months, or basically sustainable levels, we'll make an announcement to move forward in Wyoming. So, that would put our decision to restart at the end of the year, probably early January. If that was the case, because of all the preparations we've done at Irrigary Christensen Ranch in Wyoming, we could be in production by July of next year. But that's exception, not the norm. I mean, there's a couple other producers, and I think the U.S. is fairly well positioned, not only a stable jurisdiction that isn't under control of the U.S. of Russia or China, but you have a number of permitted licensed mines with existing infrastructure. And typically the ISR mines that can come on and be competitive, but we need probably 8 to 10 mines globally. And so, it's time to get back into production, and, how quickly that happens will determine how high this uranium price goes.
Now, is the bottleneck still in the processing of the fuel as opposed to the mining?
Yeah, it's very real. I guess similar to critical minerals, where there's the raw material and then there's the refining, processing, in our case, the enrichment. I don't think it's as severe as critical minerals or rare earth minerals. We were self-sufficient in uranium conversion enrichment prior to the breakup of the Soviet Union. We did make room for them when Russia kind of joined the Western world in the nuclear fuel market. So now we just have to dial that back. So that's 25% of our enrichment and conversion supplies were coming from Russia recently, so we'll have to make that up. I'm encouraged, though, that in the United States Congress, the U.S. Senate passed the Nuclear Fuel Security Act, which would expand the strategic uranium reserve to a strategic enriched uranium reserve. So that would benefit these 3 segments and help stimulate getting us back into production faster than just the market conditions are going to get us there. But this is going to accelerate that. It now falls on the House to get that into the NDAA bill that they're set to move forward, hopefully fairly quickly. The nuclear fuel provisions made it through conference. There's no objection to them. They're bipartisan supported. Unfortunately, that legislation just caught up in the bigger issues facing Congress. We had the leadership issue in the House, but we also have the NDA being held up on whether to fully fund Ukraine, Israel, and other things, or just move forward with the basic necessities. So if that can go through, then I think everyone we've talked to on the Hill says a Russian uranium ban can be passed quite easily. And so we've got a stimulus for new fuel cycle in the domestic US market, but also moving forward with the uranium ban, which is probably 2 years late in coming. But we've got to stop that $1 billion going to Putin's Rosatom every year for nuclear fuel purchases.
Yeah. Now the conflict in Niger, that's put a bit of a bid under the uranium price as well, but it doesn't seem to be the only thing that's driving price.
No, it adds to the narrative because Niger impacts both existing production from the French mines there. We understand that they're unable to get reagents to keep the mill running there. There may still be some activities at the mine, but no exports are coming out of Niger to Europe and particularly France. It also impacts new mines like DASA, Global Atomic, was moving rapidly towards production startup and is now kind of throttled back a bit to let the political situation kind of play out. But it's a reminder that our industry is really reliant on uranium supplies from places like Kazakhstan, Uzbekistan, Russia, Central Africa, and it puts a premium on, I believe, Canadian and American uranium mining companies. And I think this is going to be the decade for U.S. production to rebound, and certainly Saskatchewan plays a very central role on this going forward.
And moving forward, as we move more and more into these small modular reactors in North America, are we going to eat up all that uranium production from Saskatchewan in the United States, as an example, or are we going to rev that up and possibly replace the Niger amounts to France and Europe?
Well, I think it's important to note that most uranium supply and demand forecasts to date have really been focused on the large reactors, the 69 large reactors that have come online in the last 9 years, the 60 more under construction. But we really haven't factored in the uranium demand in a big way from small modular advanced reactors. The impact between now and 2030 won't be large, but it will be important because these are the first of a kind units that are being built in Ontario, Idaho, Wyoming, Texas. These are successful. We see hundreds, if not thousands, of these being ordered in the next decade. So we have to be mindful of that we have a structural gap today. The World Nuclear Association expects the nuclear generation and hence uranium requirements to double by 2040, and small modular reactor growth is only going to widen that gap. More need for new primary production around the world, particularly in stable jurisdictions.
Yes. So what you're suggesting is these higher prices might actually be here to stay this time.
I think so. Inevitably, our inefficient uranium market either undershoots the market equilibrium price for, long periods of time, but can also overshoot as well. And I have no doubt the market will go beyond where it needs to be in sort of a longer term equilibrium. But I think the conditions and the gap that we're in and the new mines that are needed and the lack of inventory, I think we're in for a fairly sustained bull market. And something that I think if you're investing in the space, we're probably in the first or second inning. You haven't missed out, but don't wait too long, because I think all the fundamentals are there. All the indications are pointing towards stronger uranium prices, and uranium is going to be one of the most investable commodities that we have to invest in.
Yeah. The one thing I have noticed about the markets as the uranium price went up, and the thesis was that the Sprott Uranium Trust should also go in the same direction, but it seems to have lagged behind the uranium price. Is that a
Yeah,
positive or a negative to the move?
it's curious because we've all been watching it and we all watch that either premium or discount to NAV because that's an indicator of whether Sprott will be in the market buying or not. And I think the positive of this is, although Sprott has been active in the market in the last couple of weeks, they bought some quantities, but the major portion of this uranium price increase has been without Sprott buying aggressively, which is very bullish because it says that the market, is rallying on non-Sprott, non-speculative buying. It's producers, utilities, some hedge funds, and others buying to drive this uranium price increase. If we have Sprott come back in, it throws gasoline on the fire, but they're not the catalyst anymore. But they are an accelerant if that premium and discount to NAV settles out. But again, all eyes are on Sprott. It always helps when they're in the market buying.
Definitely. But when we get down to the miners, take Sprott out of the equation because they're buying actual physical uranium. Unlike the gold market, where the miners have been lagging behind the gold price, that doesn't seem to be the case in the uranium market.
No, and thank God for a lot of investors here at the New Orleans conference, because many of them have full resource portfolios, and it's really the uranium mining equities that's keeping them in the green, because we have seen, particularly since the coup in Niger, uranium equities across the board have really rallied. UEC is a great example. I think since April, we're up close to 140% year to date. So we have perhaps performed better than the say the gold mining equities to the gold price. So that's a good thing. But I think again, we're early in this stage, and then uranium price continues to increase. I think the uranium equities as a whole, and whether you invest through the ETFs or the individual companies, it's going to be a really good place to have your money invested in.
Perfect. And if you wanted to put some rose-colored glasses on, and it's kind of like a dark story followed by the rose-colored glasses, but assuming everyone's anticipated recession occurs, and the government's desire to spend their way back out of that recession, and if the thesis is that they're going to go to green energy, will that help continue to ignite and put the bids under, and will that accelerate the move to nuclear energy in the United States and Canada?
Yeah, I mean, clearly, there's a growing realization. I see it on Capitol Hill when I visit both Republican and Democrat House and Senate offices. They're all supportive of nuclear now. That's the first time in my 40-year career that I've seen this. If you're on the left, you love the carbon-free aspect. If you're on the right, you like that nuclear power runs 24/7 and is a hedge against high gas prices in a mixed portfolio. So. Again, I think we're in a good position with that. If there should be, a pullback in the broader markets or recession, we're not immune, but I would say we're in a better position than other asset classes and investments, because you have nuclear power plants are the base load. They're running 24/7, whether we're going into a recession or not. Those plants are consuming uranium, and that's now 200 million pounds a year, and we're 50 million pounds short. So again, I think it's somewhat recession resilient if the economy gets back on its feet and rallies, like maybe we've seen in the broader markets the last couple of days. Just all the better. That means perhaps more rapid growth in nuclear generation in North America and globally. And again, look to that small modular reactor market. We're just seeing the very beginnings of that.
Wonderful. If there's anything else that we didn't touch upon about the uranium markets that investors should keep an eye on too.
Yeah, I think something to watch too. We did have a pullback in the uranium price and the equities only briefly about 3 or 4 weeks ago, and it was kind of the scare that Kazatomprom and the Kazakhs are going to full production. Well, they're having a hard time meeting their production levels at reduced targeted levels with supply chain and workforce. We see very significant investments being made by the Russians and Chinese to lock up most of the uranium production in Kazakhstan. So I wouldn't be too spooked by Kazakhstan, even if they increase to their stated production levels. We have them in the forecasts already at roughly these levels, and we still need 8 to 10 new mines, and particularly in the West, because much of that Kazakh uranium isn't coming to us beyond Russia and China in the coming years. So again, geopolitics plays a big part in our industry, but most of these developments have really been positive in the last couple of weeks and months.
Would the Kazakhstan uranium, would that end up in the crossfire if they do ban Russian?
It would, because most of the Russian uranium, rich uranium, comes with Kazakh uranium in it. But I think, more importantly, we may not even have to, ban Russian uranium in the longer term to stop Kazakh uranium from coming to the West, because that uranium is going to be largely spoken for by China and Russia. So, and they have very significant transportation issues to get it here. Not saying we won't get any uranium from Kazakhstan, but I think we're going to have to rely on mines in Australia, Canada, US, and some mines in Africa that aren't under Chinese control.
I see. Yeah, I guess it's one of those BRICS versus the West situations.
And it falls on brick lines.
Yeah, so I guess we need to get our act together in North America.
We absolutely do. And we're doing our part. And US industry I think, can be a 20 to 25 million pound a year uranium industry, not overnight, but there are licensed facilities and resources and companies that can get us to that level. So as the head of that organization, I'm quite optimistic. Running Uranium Energy Corp in Texas and Wyoming, we think we're going to be one of the earliest movers out of the blocks here to get back in production.
Wonderful. If people want to get a hold of you and follow both the Uranium Energy Corp and the uranium producers.
Yeah, I mean, uraniumenergy.com is our website. Uranium Producers of America has its own website as well. But again, you can reach out to us as well through Uranium Energy Corp and take a look at Uranium Royalty Corp as well, which is the royalty investment company in the uranium space.
Wonderful. It's good to see you in person, and I look forward to more chats as we see this continue down the road. It's remarkable. We started talking about this last year in Chicago, and it's amazing how far things have gone in about a year and a half.
Absolutely. Yeah, a lot of the things we've discussed have come to be, so it's nice when we get it right.
Yeah, it makes us feel pretty smart, doesn't it? Wonderful. Thanks for joining me, and I look forward to our next chat.
Thanks, Michael.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.